GM begins to pay back its government bailout. Let's talk to Conway G. Gittins, Reuters reporter. All right, Conway, GM buying back 200 million shares for $5.5 billion from the Treasury Department. This, of course, goes back to that TARP money back from 2009.
Yeah, it looks like the government is backing out of its bailout of GM.
Very nice.
Finally, one of the upsides to this, of course, is the corporate jet might come back. So that means the CEO won't have to drive the Prius to the auto shows or cram into the Chevy Cruze. Pretty small car there. But there are winners and losers here, depending on how you look at it. The government did provide that $50 billion bailout, of course, got shares in return. Now, in order to make a profit right here, right, they would have to sell at $69, and right now we're at $27, $28. So let's do the math, Lisa. That works out to about a 60% gain between now and 15 months from now, which is when they want to totally divest themselves from General Motors. So one economist, though, said money isn't everything. You know, if you take a look at the bailout, it saved jobs, it saved Detroit, and as the old saying goes, or went, as goes GM, so goes the economy. Of course, that's not the case right now. But nevertheless, the Canadians say, hey, we're not playing this game. We want a profit, so we're going to hold on, and we're not doing any fire sales right now.
All right. Those salary caps still in place, though, for most of those executives at GM. About $500,000, that's the cap there. But you alluded to that corporate jet before. They will get that corporate jet back, but they're immediately saying, no, we have no plans to use it, no plans to use it whatsoever.
Yeah, and one thing that we have to think about is maybe the CEO might want to make his exit right now because of that cap. The government is capping the salary. Maybe he wants to leave and make some more money. It's
an interesting time to think about that. Is it a moment that they seize to put in a new CEO? I mean, Ford's talking about it. There's a woman named Mary Barra. She's the highest ranking in the auto industry. Her name's been tossed about as possibly the next CEO.
Yeah.
See if they pursue it at this point. All right, let's move to the hot spot, Conway. Come with me, and as we do, remember those snaps at the bottom of the screen. They've got more news of the day. Oracle, now, big jump yesterday for Larry Ellison. Boy, their profits, their earnings were out, and their second quarter profit was a huge jump. Software sales are really strong. The only sluggish part of the business is the hardware.
Yeah, you know, Oracle is flying under the radar, you know, because every day we talk about Apple and Facebook and Hewlett-Packard, but Oracle is doing its thing. I mean, it had pretty strong quarter, and the sales were strong across the board in terms of software.
Right.
But the key is that new licenses they're signing. People are signing on those contracts, and it's all about the cloud. They're moving their business to the cloud, offering cloud services to their clients, and people are signing up. And they also forecast strong sales for next year.
So the cloud seems to have nothing to do with the cliff, necessarily, at least for Oracle.
Well, at least for Oracle, right? Because we've been seeing signs elsewhere that businesses are not ready to spend until the cloud lifts over the fiscal cliff.
Very good, my friend. All right. But Ellison's optimistic. He says that they've downsized the hardware part of the business and they're ready to turn the corner there. Stock's up 3.5% today, a 19-month high. And Larry Ellison, he owns 22% of Oracle, over 1 billion shares. He was worth a cool $36 billion yesterday. Today he's $37 billion. Conway, what do you think about that?
Bye-bye, Zuckulator.
I think he still doesn't dress as nicely as you, though. Bye-bye, Zuckulator. All right, let's talk about mobile ads. Speaking of the Zuckulator, who's outdone by Larry Ellison there, they just started their mobile advertising strategy this year. It's already a $1 billion business. Now there's news that next year, video ads are going to be streaming on our news feed.
Yeah, this should be no surprise to anyone who's been watching the Facebook story, especially since the IPO, because they are throwing everything at the wall to try to monetize. Now, that's Wall Street speak for just
that's a novel
make
idea.
money
Yeah.
off of the 1 billion people who are signed up for Facebook. So it should be no surprise that they're going to move to video, because it's not that video is the future. Video is now. Video will drive growth.
Right. And does that video eat into our data minutes? We don't know on mobile.
We'll have to see.
Yeah. Speaking of mobile, 10% is spent on mobile devices, only 1% on advertising. And our friend Rob Ciron over at Breakingviews says if that gap were closed, that would be $15 billion in mobile advertising.
You know, right now, $30 billion is being spent on online advertising, and that's a jump of 76% since 2006. And it should be of no surprise that video and mobile advertising should rise, because just take a look at the people walking on the street or on the train. Half of us now own smartphones, so we're connected all the time. So the question that I really have, as you alluded to before, is will the service providers back out the commercials out of your data plan minutes, or will they eat into your minutes?
That's right. We'll have to wait and see. All right, let's move back to the big board and let's talk some CEOs. There's Lisa Gersh. She's smiling there, but she's out after 5 months at Martha Stewart, Martha Stewart. The major Martha Stewart CEO, less than 5 months on the job, or just about. Things not doing well in terms of the publishing arm there, as we know. Ad revenue's down. Her television show from Hallmark Channel was yanked, just on PBS now. They're trying to go the merchandising route. That's not her forte, Lisa Gersh.
You know, how many cooks does it take to make a good meal at Martha Stewart Living Omnimedia, right? These CEOs is like a revolving door, a revolving kitchen door over there. Yeah. They just don't seem to get a business plan and get a business plan right.
Charles Koppelman before her, who ran a music company, most notably. You know, the New York Post also reporting that there's tensions, obviously, there between them, but understandably, things are going sour. I mean, the stock is way down. They're down about 4% today, and that's kind of multi-year lows. And she's also got this ongoing lawsuit with Macy's because they went into JCPenney, but they had a pre-existing deal with Macy's.
Yeah, you know, this might be a case study in what happens when the person is the brand, right?
Yeah.
The name of the company is Martha Stewart Living Omnimedia, but she's not like the CEO. She's not doing the day-to-day stuff.
Right.
And as we've seen since she left, the company just hasn't regained the glamour that they had when she was in charge.
All right, let's move on to another media company, SiriusXM. Mel Karmazin, of course, stepping down somewhat abruptly. John Malone, Mel Karmazin, seems to be a battle of the egos here because John Malone's Liberty Media wants to come in and take full control of Sirius. Karmazin not having any of that. He's out. Jim Meyer, who's been there as chief of sales, he's the interim CEO. What do you think?
Mel says, I have to be the man, right? And this new structure with Liberty Media and John Malone coming in, he's not happy about that. He wants to run the show. He wants to hold the grips. He wants to hold the reins. And so he says, you know, I'm out of here.
He wasn't really happy with it with Sumner Redstone over at Viacom either. Okay, so, I mean, it's just going to be interesting to see if Jim Meyer gets the job. I mean, he's been there a while, but they're doing a search. He doesn't have it yet.
I want to see where Mel ends up.
Yeah, good point. All right, Conway G. Gittins, thanks so much for joining us. Remember, folks, follow our Twitter feed at Reuters Insider and our YouTube channel, Reuters.com/ReutersTV. I'm Lisa Bernhard. This is Reuters.